Okay, hello guys. Oh, good morning, it's midnight. So, I want to do a quick live analysis, and that is me taking shots from this level. From here, this inefficiency we have here, right here, and we're expecting it to go downwards. Now, I first of all predicted that we have a bullish move, and on the WhatsApp community, and I said we will be taking these bar stops. All right, and we finally went for that buy stop and we took that liquidity from there. Now, after taking the liquidity, what I'm seeing right here is a purge on this high and looking forward to see a distribution phase downwards. So if I go up to the 4 hour time frame, you can actually see that right here. So the overall market has been bullish. Sorry, the overall market has been bearish. So in most cases, I might be looking forward to continue the bullish market. And the best thing is that this is not volatile. You can use your small accounts to do that. Now, this video is going to help you understand how I am able to predict the market and do my weekly projection, focusing on what each day is doing or is about to do or is going to do, right? So this is what we have right here. We finally took that liquidity, that buy stop resting on this high, and we started ranging on that high, playing around uh, that high. So right here, you actually tell that this has been purging that high, taking that liquidity, and that is not a structural break right there. So I also noticed that we have this supply zone resting right here. So it's likely that that is where the market trades into to have a reaction to continue a bearish trend. And the interesting thing is that that's happening on a Thursday, which is like a reversal trade for us. So if I run down to the 15 minutes, you see the reason why I used that fair value gap. It is seen from the 15 minutes. Now we took the high, the buy stop, and what we have right here is a distribution phase occurring right here. Now, if you pay attention, we have this high, we have this low, we have this high. All this Y is being choppy, 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 and we have this high, we have this low, then we have that failed high. Now, after the failed high is given, we trade lower, we have a liquidity sweep right here. And the interesting part is that it led behind an inefficiency that is a fair value gap that it led behind. Okay, so this is one of the things that you could possibly use to confound a um, another block or a point of interest when you're having something interesting like this. And also, someone who could be on the lower time frame is seeing this as a demand zone to buy because they see this as a break structure on this lower time frame thing. But right here, this is a very clean setup being presented to us by VIX150 1S to go bearish. So that is what is seen right there from the 15 minutes. So the purge right here, right here, right here. And the interesting thing is that that favorite gap was formed in line with that buy stop that was taken out, and it used it as a resistance. So this is a maximum pin level. You can actually see the price gets there. Price has a reaction on that buy stop, which shows you that we'll be having that purge right there, right? So that distribution phase is occurring. So with $5, you can get into this market and be possible to take that trade. Let me share an example. With $5 deposited on daily broker, I took that shot with 0.05 lot size. So to show you that this asset is not too volatile, you can trade this with the small funds that you have on your daily. Just skim 0.25 cents. Okay, so this live account. So showing you an example of how you can be able to take um, or apply risk management on your trades, focusing on all of these less volatile pair and what's it called? Knowing when to get into the trade. So you can possibly grow that your small account. This take profit right here is around $4.11. Very small money, right? But those of you that don't have enough funds, all right, I'm just showing an example. That is why I'm not taking too much trade. All right, so showing you an example on how you can patiently wait, apply proper risk management, and do not trade volatile pair with your small funding. Always trade um, pairs that are suitable for the little funding that you put on your account. So for example, if I'm funding $5, I can take this trade. For those of us, some people, some traders prefer funding what they can rig. So some we say they will fund the $5 and go full margin with that $5. It is fine. It is their choices. But for someone who wants to grow their little funds and how would I put it, and don't have enough funds in the account, they can do this and grow their account step by step, little by little. All right. So this is how you do it. So the interesting thing that comes to my mind is that today is Thursday or Friday, and we'll be expecting a trade reversal for the weekly candle, and we see how the week is gonna end. And since the overall market has been uh, bearish, so there is less strength for a bullish market. So back to the higher time frame, I want to explain something. So just a brief explanation so that to show you how you can apply risk management. All right, trading, the way I have been explaining or taking my trades and sharing with you guys, you might think it's easy, but you need a lot of work and understanding in the markets. So let me do something. Let me show you something. So right here, we go to the daily time frame. Right here, we reacted from this sell side inefficiency from the daily time frame, which is a field high. Sorry, no, leave that. We'll put it right here. Which is a field high. All right. So so we put this and they call it SMT, shift the market structure, right? So that field high and the breaker structure, because this is a um, trend. All right, the market has been bearish, but it tried to build to print a bullish trend like high, low, but then it failed. All right, giving us that field high. So I can label this as a breaker structure. Okay. To continue that bearish trend. Okay. Mm. So the next thing to do is this text is too big, so put it on 7. Okay, cool. All right, so this right here is sell side liquidity pool because that is an area of support that's been tested multiple times. So sell side liquidity pool. All right, so this is clear, right? So very trend all the way and little bullish movement. So let me go down to the 12-hour time frame. Now I want you to understand something right here because this is very crucial and important. Price violated that area of support. Now, in most cases, one comes into you. In most traders, what comes into the mind is once price trades takes that area of support, you'll be expecting a bullish reversal. No, that is not how you do it. You only expect a bullish reversal when there is a shift in the trend. All right, a shift of trend that is violating a bearish market. So that is when you can expect a reversal. Okay, so also using the algorithm D range based on which quarter did a sweep. So paying attention to which quarter we maintain the high of the year or the low of and the low of the year, which is which month, which particular month. So you can pay attention. You have to see January has been too far away. So how would you expect March to trade back up? What do you think the algorithm will think? The algorithm will be like, nah, that is too far. I don't think I can push myself that far to go up to January. That is too far away from me, guys, including February. February tried to go higher than January. Let me see where January started. Wow. January started from far away. This is where January started, and this is the high of January. Now, what, why, how would you think that the algorithm would like to stress itself to go higher to that area? There is no enough liquidity to buy from. All right, this is a strong bearish trend. It won't have the time to go to the high. It's too stressful for it. So it meant it leaves the high protected. And its main goal is to continue going lower. February tried also to go higher. Nah, too weak. It is too weak to go to the high. If you see these bullish candles, it's too weak. So why would it stress itself to go back to the high? And there was no bullish printing, and the recent bearish print that was given was this one, and it remained protected. Now, where did March open? This is where March opened. This candle. All right. So March, after that sweep of support, all right, March tried to go higher. Okay, but it did not. All right, it did not. And what it did was to go and trade into 50% of the sell side inefficiency that was given and were responsible to take out this area of support. I'm giving you guys a full breakdown on how you can be able to analyze your markets. So taking that off, so when March opened and trade into that higher time frame area of support, the next thing it did was giving you a bearish trend. So it shows you that it wants to continue going bearish. All right, so this is my low and this is the high at which March gave to us, and then wanting to protect the high. Okay, so as long as this high remains intact, then there is no bullish trend yet. All right, even this high was not broken, it was a spurge. All right, so March opened, showed the weakness to go higher and continue going bearish. That is on the 6 hour. Then we'll now go down to the 4 hour time frame. This is it right here. filled up sell side inefficiency, trade lower, give you this high, but it happens to be that high is an inducement, trade lower. So price came back to it, mitigates the area supply, and boom. So we predicted to go higher, and now we are selling on Thursday or Friday has a reversal. Okay, so all of this, right? This here is an inducement because this, what's it called? You cannot enter a trade at 50% or at the middle of a swing. The best place is at a premium. All right, so that was what the market targeted. Trace backwards uses a inducement. If you look at the week, you know that this is an inducement. All right, this candlestick is at the middle, not at the premium. So price took that out also and traced into the premium of our swing points. Then use that and showed a distribution phase and use that to go short. So this is the bullish order supply zone, bearish order block right here. So sweep or purge had a sniper. If you had a limit right here, all right, small accounts can write this and go lower to target this. Now, still also we might likely be paying attention to whatever is going to happen right here because that is also a bullish order block. But to me, since we haven't that strong bearish market, I don't think this is likely to hold. Okay, so this is a sweet trade, sweet entry right here, similar to that gold trade I shared with you guys. What else am I to explain for you? And my mentorship link is on the description. Click the link, and you'll be enrolled or redirected to join the channel where you have all my courses, lectures, and mentorship, everything in video format right there for a lifetime access. And I am still uploading videos right here, and also we host Google Meet session every Sunday before the market opens on Monday. This is very sweet. I love what you did here. So I think I'll just pause to not make this video long, and we'll update you guys in a few minutes because I feel like going to sleep. This is midnight. All right, guys. So take care and be safe. Okay, guys. So back again. I slept off, and that is it. All right. So this is the final price delivery. Like I said, Thursday maintaining that high. Overall bearish trend. Trades into another block, give us a wake-up distribution phase, kind of like distribution phase, and also seeing this sell side inefficiency. This little pull upwards shouldn't be something you should be scared of, all right, because there's no area that it is buying from, all right. So we trade back into the failure gap, and finally price got delivered because that is how it's supposed to be based on the weekly candle printing and projection. Now, moving over to the 1 hour time frame, you can actually see that. And right here, right, we swept out low, trade back, still inside the inefficiency, and finally did a structural break. So what I'm going to do is take this and put it here. All right, then after that, it traced backwards to the supply zone or the bearish short block, and that is where you can have your second entry and still stacking up your trades, applying the proper risk management and ride the market. Also, while moving your stop loss to break even, so you can take stop loss to this high, and that would be where you will be on break even. So this, like I said, is not going to be valid because it did not break any structure. All right, and it's not a valid one. This is not a another block. All right, looking for the 4-hour time frame also. Oh god, I'm still feeling sleepy. So guys, I hope that this breakdown video helped and how this live education is done and everything inside. It's a way in which you can find your entry on your lower time frame. What is this? My drawing tools. What did I do? Okay, so that is how you can be able to have your entry. Similar to this, we have this high, we have this low, we have this high price trades until the bullish order block, but then see a reaction to buy. Did not buy that much, so we have that failure right there. So price violated, trace backwards into it, used this low as a resistance and delivered. All right, so every other sell stop that we have should be something that the market will be targeting because they are no longer going to be valid. All right, so yeah, guys. So I don't think there's anything else. So yeah, take care and be safe. To enroll into the mentorship course, click on the link on the description and you'll be directed immediately to the course on Telegram after you make a payment for your lifetime access. All right, take care and be safe. Hope you have a wonderful day. Bye.